Okay, we finally got the tariff announcements and they were exactly what we predicted. The longs got liquidated, the shorts got liquidated, and now the markets are dealing with the aftermath, and it's going to be a bloodbath. If you look at the NASDAQ looks like it's going to open down 4.5% today. If you look at Nike looks like it's going to open down 14% today, and that takes it down to COVID levels. That actually takes it down almost to COVID levels. With all of that said, and with this bloodbath of an opening that I'm expecting in about the next 2 minutes, the one thing that I can say is that I think that the worst is over, and I'm not the only one who actually thinks that. Trump actually tweeted, or he didn't actually tweet, but he was on Truth Social this morning. He says, the operation is over. The patient lived and is healing. The prognosis is that the patient will be far stronger, bigger, better, and more resilient than ever before. Make America great again. Pretty much, I think that the worst is over, but we need to deal with this market carnage. And we need to see what the next move is and what the markets are going to be doing. So today is going to be a very fast show because the news is breaking as we hear and as we're bringing it to you live. If that sounds good to you, what I need you guys to do again is to subscribe to the channel. Thank you for getting us over 1.16 million. Now we're going for the 1.2 million subscribers. Let's get today's show on the road, guys. A very fast show. All right, let's stay live for the market opening. You can see the market. This is the pre-opening. The market's opening in about 30 seconds. We have about 30 seconds to go for the market opening. I'm going to keep refreshing this page so we can see exactly what's happening. It looks like the NASDAQ is going to open down 4.41% today, 4.41%. This is the heat map. We are 25 seconds away, more or less, from the opening after the tariff announcements, and it's going to be a bloodbath. But the good thing is that I think it's going to be that the worst is over, and that as Trump said, the operation has taken place on the patient, and the patient is now going to get into recovery. Let's watch this opening live as soon as it happens, and then we can get on with the 𝗕𝗏𝗄𝗏 show. While we're waiting, guys, obliterate the like button. Lots going on here today, bringing you crypto love and crypto wisdom every single day. Okay, let's go. The markets are open. Let's refresh that. At least they should be open. Come on, don't do this to us. Let's see if we just change the time frame. Okay, that's the weekly. Let's go back to the daily. Still not open, still not refreshing. All right, so we're going to wait for the NASDAQ to open. Right now, it looks like the NASDAQ is going to open 4.45% down. If we look at the bubbles, let's quickly look at the bubbles. Absolute bloodbath in crypto, absolute bloodbath in the stock markets. I've seen people compare this to the COVID opening, like when the skies were closed for COVID, which was again during Trump's tenure. We got the markets down like this, and now we're seeing the markets down again. Let's analyze exactly what happened. Although anyone that was watching our shows shouldn't be surprised by what was happening, because I said to you yesterday, I don't see Trump going soft on tariffs. And the reason why I don't see Trump going soft on tariffs is because he has a job to do. And the way to do that job is not to relent and to go soft, but actually to hit the market with the tariffs and then to negotiate later. And that's exactly what we got last night. So if you look at what happened last night, it was actually pretty interesting. If you look at the 1 hour chart, and I've gone down to the 1 hour chart on Bitcoin because the NASDAQ chart looks exactly the same. But what you can see is that Bitcoin was actually doing very well. It was at 88,500. And the reason why Bitcoin was at 88,500 at one point is because the market thought, based on what Trump was saying, that there's only going to be 10% blanket tariff. So this is what happened. This is what he said.
But you see the numbers. The numbers are so disproportionate. They're so unfair. At the same time, we will establish a minimum baseline tariff of 10%. You notice that on the chart. And that'll be on other countries to help rebuild our economy and to prevent cheating. So we're going to have a minimum of cheating, and we're going to be very severe on the people that at the gate that watch the tariffs and watch the product coming in, because there's been a lot of So
he spoke about the 10%, and when he spoke about the 10%, markets were almost rejoicing. They were like, wow, we were expecting 25, 30%. And that's when the markets were doing that. And in fact, let me take you to the NASDAQ and also put the NASDAQ on the 1 hour chart, because it's exactly the same chart. You can see the NASDAQ futures went up to over 20,000. Then the bomb was dropped. When I say the bomb was dropped, Howard Lutnick handed Trump a cardboard poster. It was literally, believe it or not, like the tariff announcement happened on a cardboard poster. This is it. This is the announcement. This is the poster.
If you look at that, China, first row, China, 67%. That's tariffs. charged to the USA, including currency manipulation and trade barriers. So 67%, I think you can, for the most part, see it. Those with good eyes, with bad eyes. We didn't want to bring, it's very windy out here. We didn't want to bring out the big charts because it had no chance of standing. Fortunately, we came armed with a little smaller chart.
So on that board, what we got is we got the announcement of the actual tariffs which were going to be imposed on countries. And let me tell you something, these tariffs were pretty harsh. Look at China, up an additional 34% over and above the 20. The European Union, 20%. Vietnam, 46%. Taiwan, 32%. Japan, 24%. Pretty much every country in the world that has tariffs on the United States got tariffs back. Actually, I read a tweet that said the only ones that were spared were North Korea and Iraq or something, and Iran, because they've got sanctions against them. The tariffs were so harsh that when journalists tried to rationalize them, they just couldn't comprehend them. Just listen to what happened on CNN.
Reciprocal tariff. China has this 34% tariff. There were already 20% tariffs in place on China. So is that 34% on top of that, meaning it's a 54% reciprocal tariff on China?
I believe it is.
Okay. And
so they couldn't believe it. They were like, over and above the 20%, you're adding another 34%. And Scott Besson said, yeah, I actually believe that that's what's actually going on. To make it worse, they spoke about the tariffs as reciprocal tariffs. And what reciprocal tariffs means is that if you impose a tariff on us, we impose the same tariff on you. But the reality in terms of how they created the tariffs actually wasn't reciprocal. It was actually based on trade deficits and trade surpluses. So that means that, in other words, instead of applying the tariffs based on how much you apply tariffs on US imports, it actually looked at the balance of trade between the two countries before they calculated the tariff. Now, you'll remember that we spoke yesterday about the countries that had the largest trade surpluses with the US. And we said China was one of them, Mexico was one of them, Vietnam was one of them. These are the ones that actually landed up getting the lion's share of the tariffs, which is kind of crazy to think because, I mean, I read this tweet that says, if they want to pay less tariffs, they need to lower the ones they're imposing on the United States. This is a big brain move. Except they aren't imposing those tariffs. It's a trade deficit. And so the only way to sort it out is to import things that you don't actually need or that you actually can't afford, which is a little bit crazy. Anyway, it's exactly what we thought. We knew that Trump's strategy here would be to go absolutely aggressive. And I love this tweet from Bill Ackman because he says, sometimes the best strategy in negotiation is to convince the other side that you're absolutely crazy. And I must say, I've actually done that a few times in negotiations where the other side just thinks, hold on, this guy's not rational. This guy's not logical. We must just negotiate and do the right thing with him. And this is exactly what Trump did. As we expected, as we said, he has gone in, guns blazing, and said, we're going to enforce the tariffs. And he went in with what we think is close to or possibly the worst case scenario. This is the full table. You can get it on our Twitter, on the 𝗕𝗂𝗃𝗍 Twitter. And now the market, oh, here we go. Now you can see the market starting to rationalize the effect of those tariffs. Just have a look. Nvidia down 5%, Apple down 7.6%, Meta down 6.49%. Now the market's starting to rationalize exactly what's happening when it comes to those tariffs. And it's not only the American market. So let's look at world markets. This is the picture right now. Dow Jones down 2.71%, S&P 500 down 3.26%, NASDAQ down 4.39%, small cap stocks 4%. The only thing that's up is the VIX. The VIX is the volatility index. It shows you how scared people are. Then we go on to the rest of the world. Every single European market down today. Then we go into Asia. And if we look at Asia, China down, Hong Kong down. Pretty much all the markets down and affected by this. Now let's look at some individual stocks. So you got Nike. Nike down 10.9%. Why? Because Nike is an American brand manufacturing most of its stuff in Vietnam. In fact, if you look at where Nike hit, Vietnam was one of the hardest hit countries, which is quite strange because a lot of companies in the United States moved their manufacturing out of China into Vietnam, where they could still get cheap labor after the US had wars with China. a lot of countries actually moved out of China to appease the US government, and they moved to Vietnam. And now Vietnam, because of its trade surplus over the United States, has been hit really hard. And that's hit Nike, because Nike has over 450,000 workers in 130 factories, a lot of them actually in Vietnam. So this is the collateral damage which is actually happening. Nike was down 14% at one point. To be honest, I actually bought some Nike. The reason why I bought it is because I love buying these pressure situations. I know that in time, this whole thing will sort itself out. And this is the right time to actually be buying them. The other thing, the other casualty of this is the US dollar. Remember, we were talking about the 𝗣𝗃𝗧 not so long ago, and the 𝗣𝗃𝗧 was at about 109. Well, here we are a little bit later. You'll remember that I said that in Trump's first presidency, what we got is we got the 𝗣𝗃𝗧 collapsing straight after Trump came into power, and we predicted that the same thing would happen here. Here you have the 𝗣𝗃𝗧 breaking down again, and we'll talk in a second why the 𝗣𝗃𝗧 is actually breaking down. But in a nutshell, it is a bloodbath out there, and it is exactly what we expected. But the truth is, despite this bloodbath, I actually think that this market is actually performing much better than expected, given the tariffs that we've just seen implemented. So with those tariffs, I think the market, I mean, this is what 𝗕𝗃𝗧𝗽 says, is what most people don't realize, that this is actually a pretty good reaction to the largest tariff wave in US history. This is it. This is, Trump has done everything that he can do. He has done maximum damage. He has given us the worst case scenario of tariffs. And even he says the operation is over, the patient lived, and now we are going to start healing. And so to me, this feels very much like a local bottom. Yes, today it's going to be rough on the markets and we can expect the prices to go down. But from here, we start to get a period of negotiation. In the beginning, we got Trump putting down his best, his most aggressive foot forward. That is a negotiation tactic. I think I spoke to you guys about that a while back, where I said to you, look, if I want to sell you something that's worth $100 and I want to sell it for more money, then what I'll say to you is I'll anchor you. I'll be the first to talk. And I'll say to you, hey, buy this for $200. Problem is that I've now anchored your price at $200. It's a very old negotiation tactic. Once I've anchored you at $200, it's very hard for you to bring me back to $100, right? Because if you say 50, it sounds crazy, right? So how do you go? And so Trump used a classic negotiation technique called anchoring, where he basically went with his highest offer to anchor all the countries there. And pretty much now the response and the negotiations actually begin. And that is why I say that today is probably the worst. We're at the worst. We're watching the markets live. We're seeing the worst kind of reaction. This is the equivalent of the COVID type reaction that we got. And from here, pretty much, I don't mean immediately, I don't mean tomorrow or the next day, but actually I think that now we actually start to reverse this. And the only reason why Trump could have been that aggressive, because you can't be that aggressive if you don't have anything to back you up. But all these countries know that the US is the biggest consuming economy in the world. It's the richest consumption economy in the world, and you cannot operate without the United States. And so Trump is flexing his muscle, knowing that he's now in the power seat and he can actually start negotiating. And so that's what's going to start happening. And I agree with Bill Ackman, because Bill Ackman pretty much has analyzed the situation. And I think two things here. The first thing is he's convinced the other side that he's crazy. But more important than that is, I think that the countries that negotiate first will get better deals. So almost think about it like this. Trump's now throwing his tariffs. The longer you upset him, the longer you keep the negotiations going, the harder it's going to become. And so now we're going to start seeing countries actually rush to resolve these tariffs as quickly as possible. And what I'm expecting is, I'm expecting a whole slew of announcements from countries saying, look, you know what, we'll drop the tariffs. We'll drop the tariffs, just drop the tariffs on us, and let's carry on going forward. There will be some countries that continue to fight. I expect China to fight till the bitter end. I expect all countries to put up big facades in the media. I expect to see a lot of headlines, and we're already seeing them already. We're seeing, you see already here, there's the negotiation. Latnik sends a message to China saying, look, 20% China tariff would drop if she offers XYZ. In this case, he's talking about fentanyl cuts, right? Scott Bessent has actually warned a lot of the countries. He's basically said, look, if there are tariffs on you, don't try and retaliate. Don't try to fight us. Because if you do, you're going to make things worse. Just listen to what he said.
It was my advice to every country right now is do not retaliate. Sit back, take it in. Let's see how it goes, because if you retaliate, there will be escalation. If you don't retaliate, this is the high watermark.
So basically, he's basically driving a very, very, very strong message to all the countries. Don't try and fight us. Take this as the worst case scenario, and let's start negotiating from this point. And that is exactly what I expect to happen. Right now, markets are in absolute panic. They are panicking because they are discounting this scenario. But this is the starting point of the negotiation, and now the punch has been thrown, and now all we're going to do is we're going to start negotiating our way. Into what's happening. As I said, we're going to get a lot of countries in the press, and you can see the Canadian Prime Minister, the European Union, all reassuring that everything's fine.
Many of you feel let down by our oldest ally. Yes, we must brace for the impact that this will inevitably have. Europe has everything it needs to make it through.
You see, so every country is going to be reassuring. The UK also reassuring its citizens that they have everything that it takes and that everything is going to be fine.
Economic impact from the decisions that the US has taken, both here and globally. But I want to be crystal clear. We are prepared.
It's all fronting, and the reality is that none of these countries can continue without the United States, and now we're going into negotiation season. So we're starting off at the worst point, and from now on, all you're going to get is announcements of how things have been resolved, and this tariff has been resolved, and that tariff has been resolved. And that's why I say I agree with Trump that today, it's the worst day for the patient. The operation is finished, and now the patient actually goes into recovery, and we start to see how the markets actually respond. Let's look at some of the other responses on the market. We looked at some of the indices. We looked at the 𝗔𝗍. We looked at some other things. But let's look at what the effects of these tariffs are actually going to be and how the markets are actually pricing in these tariffs. And I think a good place to start is let's look at inflation. And the reason why we need to look at inflation is because generally, when there are tariffs, it increases the price of imports, right? The problem is that locally, the manufacturers don't have time to manufacture the same products. And so what you'll end up doing is you'll end up importing all the things that you need to import at higher prices. And in the short term, what that does is it actually does drive up prices, and it is going to drive up inflation. And that's exactly what you can see in this chart. You can see that in the short term, short-dated measures of inflation have risen because in the short term, there is going to be increased inflation. However, in the medium term and the long term, the inflation expectations have not actually moved. And the reason why they have not actually moved is because by that time, either the tariffs will be resolved or they will bring the manufacturing back in-house, and it will become much cheaper to actually buy the products in-house. Also, I read this tweet from Joseph Wang. He says, big tariffs would lead to more rate cuts than expected. The inflationary impact on tariffs can be mitigated by the foreign exchange moves, right? And you're actually starting to see big foreign exchange moves. You can see that the 𝗔𝗍 is actually down to 101.5. So you can see that there are massive foreign exchange moves. The other thing that's happening, which is pretty interesting, is that the US 10-year Treasury yield has started to drop. Now, you will remember that this is the key indicator that we need for the Fed to start cutting interest rates. So what this is, it's a measure of what the market believes the 10-year Treasury yield should be. In other words, the rate on borrowing money for the next 10 years. And the whole thing that we want to see is we want to see this 10-year rate going down. The reason why we want this 10-year rate to go down is because that will force a drop in interest rates by the Fed. Effectively, we'll be forcing the Fed's hands. Why does that happen? Because if you look at 10-year Treasury yields, if the rate on 10-year Treasury yields starts to drop, that means that the market is paying a low rate for 10-year Treasury yields, which means that the US can refinance its debt at low rates. What does this actually mean, though? Why is the 10-year Treasury yield dropping like this? The reality is that the 10-year Treasury yield is dropping like this because people are exiting risk. They're exiting stock markets. They're also exiting gold, believe it or not. I mean, if you look at this drop in the price of gold, they're exiting gold as well. And they're basically saying, look, we're going to take our money and we're going to put our money into Treasury yields. And those Treasury yields will yield us 4% a year for the next 10 years. And we're happy. That effectively means that people are getting really scared. When people get really scared, they take their money out of markets. They take their money even out of gold. And they put it into what they believe is the safe haven asset, which is the safest asset with the lowest return. So with the lowest risk is the US T-bills. And when people start buying US T-bills, you don't have to give them a higher rate of return to incentivize to buy it. And therefore, you can see that the rate in the 10-year Treasury yield is actually starting to drop, which is exactly what Scott Bessent wants. And this guy says that he said the folks just don't get it. Rates are declined. Bessent is a happy man. His North Star is the US 10-year Treasury yield, not the Fed. Tariffs will eventually force the Fed's hands. Why? Because tariffs cause uncertainty. Uncertainty causes people not to invest. It causes people not to spend. That will cool down the economy. The only way that the Fed's going to be able to stimulate the economy again, go into quantitative easing, print more money, and things like that. Pompliano also says the administration told the public in every interview they wanted to get the 10-year Treasury yield down. It's now sitting at 4.05%. Now, that's quite a massive drop. If you take the period where Trump came in, the 10-year Treasury yield was at 4.8%. It's now down at 4%, which means that there's a 20% drop in the Treasury yields, which is a big number for Treasury yields. For a 20% drop in 1 month or 2 months for Treasury yields is a massive number. And everyone's starting to see that this whole thing of creating the uncertainty, which is what Trump wanted, is actually working. Another interesting chart is the 𝗔𝗍. Now, we've got to talk a little bit about the 𝗔𝗍. The 𝗔𝗍 represents the strength of the dollar as compared to every other currency. When there's no demand for the dollar, as you can see here, the price of the dollar actually drops, right? So now, as you can see, there's all of a sudden less demand for dollars. You ask yourself, why would there be less demand for dollars? There's a very interesting explanation that 𝗬𝗧𝗪 actually said. He said, look, let's think about China. China is selling things to the United States. And they're selling things to the United States denominated in dollars, right? So just think about this. The United States buys Apple phones, let's call it, from China. They pay the manufacturers, or they pay the factory in dollars, right? Now, what China does is it doesn't swap those dollars back to Chinese currency. It actually holds those dollars and takes those dollars and reinvests those dollars into US T-bills, right? And so effectively, what you're getting is China hoarding these dollars and using the hoarded dollars to invest them in US T-bills. By the way, China owns almost $1 trillion of US T-bills. Now, here's the catch. If China doesn't receive more dollars, and I use China as a proxy because let's just pretend, or let's just assume that many countries actually do this, right? If there are less imports going to those countries, they have less US dollars. And if they have less US dollars, they are investing less US dollars in the T-bills. And that's quite a dangerous situation, right? Imagine all of a sudden China says, look, we're not buying T-bills anymore because we don't have any more dollars. That could collapse the whole T-bill market. Now, what would happen if that T-bill market collapsed? Well, you'd need someone to actually land up buying the T-bills. Who would buy them? If China doesn't buy it and a whole lot of other countries don't buy it, who would buy the US debt? And the answer is that probably the only party that could buy the US debt would actually be the Fed themselves. And that would force the Fed to actually print more dollars. Now, tomorrow, I'm bringing 𝗬𝗧𝗪 onto the show, onto our Friday banter. And he's going to explain it because he was the one who actually broke it down for me this morning when we discussed this. He explained to me exactly how these charts work. But effectively what's happening is, he says, the tariff formula is further evidence that he's laser focused on removing the imbalances. The problem for Treasury is that without dollar exports, foreigners can't buy bonds. The Fed and banking system must step in, and which means that eventually they would have to land up printing. And that is one explanation as to why the 𝗔𝗍 is starting to drop. That is one explanation as to the 𝗔𝗍 is starting to drop. So I think all in all, to summarize where we're at today, which is where I want to get to. So number one, it's a bloodbath on the markets. It's expected. I do believe that the worst is over. You can already see that the markets are slightly recovering from the brutal opening. You can see Bitcoin is back at 82,500. I do believe that altcoins, Bitcoin dominance, I think there's a little bit more pain that's going to happen there. I don't expect a V-shaped recovery, but I do expect that from here, we'll get a slow recovery, a slow and sustained recovery as the market realizes that one, the economy is slowing, B, that the tariff announcements are going to start getting reversed bit by bit by bit, and C, that the US is actually focused on building a very long-term sustainable economy. These guys ain't looking at the markets like we're looking at the markets every day. They don't have a camera on their face, and they don't need to do a live stream every single day. So they're not looking at the markets every single day. And even if they are, They're not worried about it. Listen to what they're
That's
worried
why
about.
you've been having a lot of conversations with Republican lawmakers. But before I get to that in a moment, we're seeing international markets start to respond to the president's announcements. Obviously, the markets in the United States are already closed. What do you expect the stock market to look like when it opens tomorrow in reaction to this?
I don't know. I don't know where it's going to trade open tomorrow. I don't know where it's going to close tomorrow. And, I think what's going to be important are the underlying economic fundamentals, because at the end of the day, Warren Buffett says in the short run, the market's a voting machine. In the long run, it's a weighing machine.
Well,
so the markets, they're looking at that. I mean, here's another the theory is that Trump is imposing tariffs to pressure the Fed into cutting rates isn't new. He did something similar back in 2019, ramping up tensions with China while publicly criticizing the Fed and pushing for easier policy. Here's the logic. Tariffs increase the risk of an economic slowdown. The Fed responds with a more dovish stance to offset the damage. Market cheer, rates go down again, yields drop, the stock market rallies. And so that's the cycle that we want. And so I maintain my thesis that we're going to get a little bit of turbulence. From May, we're going to start recovering, but the real recovery is probably going to be somewhere around Q3, Q4, which is August and September. And until then, I think for now, certainly, we have seen the worst. 𝗕𝗏𝗃 also speaking on Fox News.
What's going to happen is you're going to see the greatest renaissance of manufacturing in America. $4 trillion investing in America. That's going to create the most incredible set of jobs. Tradecraft is going to come back to America. People, a high school educated workforce is going to get trained to do robot mechanic, HVAC, but in high tech, fabs for semiconductors. I mean, what's going to happen is you're going
So that's it. They're looking to build America into a manufacturing powerhouse again. They're looking to bring all the jobs back. They're looking to make America a country that's not reliant on government spending. And they've taken the first step. And I think, once again, I'm going to say it again, because I think a lot of people here are very worried. I think the damage has been done. Trump has dealt his worst, his tariffs. And from now on, we basically expect a recovery. And so, yeah, I think that's the big news for today. I think another thing which maybe slipped through the cracks because of everything that's happening is that the Stablecoin Act, Stable Act, was actually passed, which is amazing, which takes us one step closer to stablecoins. All right, before we go, just some housekeeping announcements. Number one, our new exchange partner, Bitfunded, has come to us with an amazing special for you guys. If you guys open an account, and here's the platform, it's actually quite a cool platform. But if you deposit $100, you get $20. If you deposit $500, you get $100. If you deposit $1,000, you get $200. If you deposit $2,000, you get $400. And one lucky person every single day will earn themselves $5,000 if you sign up. If you want to sign up, there is a link below. You can see it over here. There is a link below to the Bitfunded thing. Also, I want you guys to just do me a favor while you're here. And I'll do you a favor in return. So number one is, that's the Bitfunded. If you guys want to sign up, no KYC required. You can sign up from anywhere in the world. If you guys, I want you guys to also sign up to our newsletter. This is our newsletter, which before the show, this actually breaks down everything that I'm going to talk about. So it happens before the show. Now, the link to this newsletter, it's called Good Morning Crypto. It really gives you the alpha way before the show, is this thing over here. And then lastly, before we go, for those of you who are still going for the Bitfunded, 2 hours left. If you buy any Bitfunded challenge for the next 2 hours, you will get one equal one absolutely free. Anyway, with that in mind, the worst is over. I'll see you guys again tomorrow with 𝗤𝗏𝗧𝗨𝗡. Until then, trade well, my friends.